If you're a first-time buyer, your financial picture is not always as simple as one job and a savings account. Maybe you work full-time, maybe you have little side income, or maybe you are building your credit, or maybe you're feeling ready, but you are convinced you need a huge down payment before you can even buy a home. The good news is conventional loans actually allow first-time home buyers to buy a home with as little as 3% down. And with the newest updates with Fannie Mae that went into effect November 16, 2025, qualifying just became a little bit easier and more accessible for a lot of people. And in this video, I'm breaking down everything you need to know about using the 3% down conventional loan program. And this is what I'm going to be going over: how to qualify as a first-time home buyer, the new DU credit rules that went into effect November 16, 2025, what the 3% down payment program really is, how lenders review your income, how debt to income works, and what your monthly payment actually looks like, how mortgage insurance really works, and new risk-based underwriting, gift funds, real examples, and the biggest mistakes first-time buyers make. And by the end of this video, you'll know exactly what it takes to become a homeowner using the 3% down program, especially under the new Fannie Mae updates. Hi, I'm Alex Ramirez, and I help home buyers build long-term stability and wealth through clear, simple financial strategies. And if you want content that respects your time, hit that like, subscribe, and tap that bell so you never miss any of my videos in the future. I do weekly updates. Now let's get into it. What a 3% down payment loan actually is. A conventional loan is simply a mortgage backed by Fannie Mae or Freddie Mac. Both agencies allow first-time buyers to use 3% down program. So if you're buying a $500,000 home, your down payment is only $15,000. Not $100,000, not $50,000. $15,000. This program allows you to enter the market sooner so you can start building equity instead of paying rent. And now with the updated Fannie Mae rules, the program is even more flexible and inclusive than ever before. Okay, so who counts as a first-time buyer? If you've never owned a home, and you are considered a first-time buyer if you have not owned a home in the last 3 years. And that's it. As long as you haven't owned a home or you haven't owned a home in the last 3 years, that makes you a first-time buyer. Only one buyer on the loan needs to meet that requirement too. So what are the minimum requirements to qualify? So recently updated with Fannie Mae credit changes effective November 16, 2025, this is where the biggest change happened. So the old rule, you needed a minimum credit score of at least 620 for conventional loans. So the new rule that went into effect November 16, 2025, Fannie Mae's desktop underwriter, known as DU, no longer requires a fixed minimum credit score. DU now evaluates your loan strictly through a comprehensive risk-based analysis, which takes into account the following: your credit history, payment patterns, revolving usage, debt levels, income stability, asset strength, and your overall profile. This means borrowers with scores below 620 may still get approved. Doesn't guarantee it, as long as the rest of the profile is very strong. This is one of the biggest updates in many years. But here's an important clarification. This does not mean that the credit scores do not matter. It means DU will no longer auto-deny you for being under 620, like the previous guidelines. Lenders may still have overlays when approving loans, like pricing, mortgage insurance, and rates will still be affected by lower scores, but the rigid 620 or nothing rule is gone completely. And here are some other key requirements to debt to income ratios. Most approvals land around 45% DTI. Some borrowers can go up to 50% depending on the DU findings. So income documentation, so you need at least 30 days of pay stubs, 2 years W-2s, tax returns if you're self-employed or maybe have a side business, and 2 months bank statements. So down payment, you're gonna have to show your savings, gift funds, 401k withdrawal, or a loan, a combination of all of the above. So the property types: single family homes, condos, townhouses, manufactured homes as long as you own the land as well, and 2 to 4 unit properties with 5% down or more. And here's how income is reviewed. Your income must be stable, verifiable, and likely to continue. Fannie Mae's risk model will now weigh the strength of your income patterns even more heavily, since your credit score is no longer the automatic barrier. So let's go over understanding your monthly payment. So here's an example. Your purchase price is $600,000, down payment 3%, so that's $18,000. That means your loan amount will be $582,000. Typically, your mortgage payment is going to include the following: your mortgage principal and interest payment, mortgage insurance, property taxes, and homeowners insurance. So with this example, the total monthly payment is roughly between $4,700 and $4,900, including everything every single month. So remember, your principal pay down builds wealth and rent does not. So let's go over mortgage insurance. Let's explain this briefly. Mortgage insurance is based on credit, income, loan to value, and risk level from DU. The new risk-based DU system may impact mortgage insurance pricing because lower scores may now be approved more often. Here's some key facts about mortgage insurance. Mortgage insurance can be cheap, mortgage insurance can be removed at 20% equity, or also it automatically falls off at 78% loan to value. But also keep in mind with these changes with Fannie Mae, with the lower credit scores now being able to get approved, your mortgage insurance will take a major hit and may have issues with you getting qualified with the higher payment now. And if you want to know what you qualify for with these new Fannie Mae updates, reach out to me. My phone number is going to be right here on the screen. Give me a call or send me a text message, or you can go to my description below and schedule a discovery call. Let's cover gift funds and first-time buyer strategies. Gift funds can now be even more powerful with the new DU flexibility. They can cover down payment, closing costs, or both. The common strategies are match savings, partial gift, 401k, plus a small gift from family members or friends. And here's some first-time homebuyer myths. Myth 1, you need 620 to qualify for conventional. That's outdated. After November 16, 2025, DU uses risk-based assessment now. And myth 2, you need 20% down, and that's completely false. You just need 3% down as a first-time homebuyer. And myth 3, you need perfect credit, and that's false. DU now evaluates the full credit profile. And myth 4, rent is safer. That's false. Rent increases, equity grows. So let's go over when conventional beats FHA. You could also go to my video with conventional versus FHA, and it'll give you all the details to that as well. So here's when you choose conventional loans. Your credit profile is decent, you want mortgage insurance removed later, you want a cleaner long-term loan, you want to buy a condo, or you want flexible gift rules. And now with DU's risk-based model, more borrowers who used to go to FHA may now qualify with conventional financing. And let's go over how to prepare under the new guidelines. Okay, so here's the updated formula. Number 1, understand your full credit profile. Number 2, organize your debts. Know what you're currently paying. And number 3, prepare stable income documentation, W-2s, tax returns, etc. And number 4, plan your down payment strategy, gift, your personal funds, 401k. And number 5, get pre-approved under the new DU rules. And number 6, know your comfort zone. Know what you're comfortable paying every single month. The new DU system rewards borrowers who are prepared, even if their scores are not perfect. And remember, buying your first home does not have to feel overwhelming. With the right plan, the right guidance, and the right loan program, you could become a homeowner much sooner than you think, especially with these new Fannie Mae updates, helping more buyers get approved. And if you want help putting together your roadmap or want me to run your numbers under the new DU guidelines, reach out to me directly. You can call or text me. My number is going to be right here on the screen. And don't forget to like, subscribe, and tap that bell so you don't miss any of my videos in the future. And you could also forward this to somebody that it may help. And remember, be smart, be prepared, and let's get you home.